Good morning. It's Wednesday, the 26th of October. This is the Phoenix Blue morning update presented this morning by Tom Colley. Yesterday we had a market dominated by the dollar yet again. Will it continue its bullish run, or will we see that correction that we've been expecting? We'll have a look at charts in a moment. Before we get there, let's have a look at the news. We had some Euro news in yesterday morning. German business climate numbers came in ahead of forecast, so that was quite positive for the euro. Not that it had any great effect, in all honesty, but again, we'll look at the chart in a moment. Then we had some data on consumer confidence coming out of the States. That came in under forecast. The previous month data had also been revised down, and that put an end to what had been quite a bullish move on the dollar up until that point in the day, or certainly in the afternoon. We'd seen a breakthrough on the dollar index through our 98.50 zone, but that brought a pullback to that level. We then had Mark Carney speaking at 3:35. The pound had sold off very strongly prior to this dollar weakening caused by the consumer confidence figures there. That came back and recovered the majority of its losses, maybe aided by what Mark Carney said to the parliamentary committee. We then had a speech from Mario Draghi, which wasn't very of great deal of interest for traders. It was more of a general conference type speech, and didn't really give us any clues to what the ECB might be looking to do in the future. Look, overnight, last night, we did have some data on CPI out of the Aussie. That was quite significant. It came in ahead of forecast, which was already ahead of the previous month. CPI is in particularly important at the moment. It tends to be linked to growth or the avoidance of stagnation in an economy, so that was seen as a positive move, and again we'll have a good look at the Aussie chart in a moment. Only major news out today is the crude oil inventories. Obviously, if you're trading crude or you're trading CAD, the commodity currency linked so strongly to crude, you need to be aware of that 3:30 this afternoon. We will be looking to see whether the stock holdings of crude oil in the States have increased or decreased relative to last week, in order that we can look at it on a simple supply and demand basis. Okay, here's the dollar index, and this is a spike up we saw prior to that consumer confidence data coming out rather negatively. It was a clear move above this 98.50 zone here. But as soon as that data came out, it pulled back. It's still holding above that level. It hasn't yet broken down. We can't yet say it's going to. Early indications after this slide was taking was it did appear to be pulling back a bit this morning, but we will need to see a significant close below that level before we can definitively say that this market's going to contract back to one of these two levels here, we believe, before potentially going long again. Okay, over on the euro, well, we saw a similar sort of thing, but when that little dollar surge prior to the poor data came out, the euro did hold up quite well there, as if there was significant buying. If you made a comparison between it and, say, the Swissy, it held this level much more strongly as the negative data for the dollar came out. Oh, sorry, before the negative data for the dollar came out, when we had dollar pressure to the downside on this chart. So, again, this chart looks like it needs a pullback. There's a significant level we're looking at here. It may reach this level, which is the equivalent of circa 99.50, 100 on the dollar index before getting there. That's really what we're waiting to determine at the moment, is are we going to get to that level and the corresponding level on the dollar index. Over on the yen, we saw a breakout above this key zone here on the yen based on that dollar strength, but as the dollar strength weakened, we saw a strengthening of the yen, which is, remember, downside on this inverse chart, and so we still await a significant break of this level. Our bias is still long this market. We can see we've got a triangle here, and pressure building at this level. So we will, certainly on continued dollar strength, we will expect to see a breakout. If we get the pullback from the dollar, we may see a pullback right back here. We may see a more restrained pullback before we do get the breakthrough there as the dollar strength comes back in. Here's the Swissy, already mentioned it. We saw this reaction to the dollar strength in the first instance, and then the negative data came in, the dollar fell back, and this, certainly the spike up there was more significant than the euro, suggests there were less Swissy buyers in this market. Again, this is an inverse US dollar CHF chart. We also failed to fall back below this trend line that's come into play now. So again, we're sat at a level waiting for something to happen. You can see I've got an intraday level marked there. I was watching that yesterday to see if this actually would pull down and give me some sort of opportunity to the downside to this level in the first instance there. Now, the chart that's been interesting overnight is the Aussie. The Aussie was relatively bullish through yesterday. We've had that strong CPI data come out, and we've had another bullish move in the Aussie. There's another reason why we potentially have got this bullish move, and why potentially this move here was also so strong. We did trade this short. We just stayed within our stop on that, and we took profits on the downside into that market. But we can clearly see we've got more of a range here than honouring the trend line here because of that significant break. I still think that has an impact, but the other thing affecting the Aussie price here is the price of iron ore and coal, particularly in relation to the Chinese market. Now, as we know, the Aussie is a commodity currency, and what we've got here is like a heat map of what Australia actually exports to Japan, and 56% of its exports by value are iron ore and 9.3% are coal. Now, the coal is actually used to smelt the iron ore, so they're virtually tied together. Now, the price of both coal and iron ore has been on the rise recently in China, so that would give a positive stance to the Australian dollar. Now, this is something that is relevant to all commodity currencies. We all know about crude oil and the Canadian dollar and things like that. It's worth doing some research into these things to find out what a country's major exports are, and interestingly also where the majority of those exports go, so that you can see how markets might interact to price change. And this is very simple, supply and demand, but it's just knowing where that or where the materials or the goods or the exports go in the world, so that you can look at them in a two-ended supply and demand context. An example of this would be, well, 9% of the exports to us from Australia to China are coal, but I know if you put that up as in the exports to Japan, 25% of the exports are coal. So you can see when potentially how the differences might affect between what's happening on the buyer of the commodities. So that's just a bit of a background on commodity currencies. It's research you can do very easily on the internet. It's worth having in your armoury, so that when you read about something, you might have read yesterday iron ore prices were going up, and you might have thought, so what? Or, you might not have seen the relevance of it. But all these factors play in to what we're doing. As I say, simple supply and demand, but you have to know the buyers and the sellers. Another example of this is obviously the Canadian dollar versus crude. I know Mark showed you yesterday the Canadian dollar because we had the Bank of Canada Governor Poloz speaking and dropping a bit of a clanger overnight. But if you remember from the chart there, we were looking for CAD on the weak side. That will be driven. We're starting to see a breakdown in the price of crude oil. We've got a commitment of traders. Extreme signal at the top here. We've previously had these at these levels, and the market has been responding. It's responded to the last two extremes, so that gives us confidence it will do the same here. We've got a double top formation. We're looking for a break of this trend line, a close to the downside before we look for a pullback to take this market to the short side, and we possibly see 42s, 43s in the first instance as a target for that market. This market's been driven to these levels by news around OPEC, but the information coming out about Iran not being part of the freeze in oil production and actually being, or wanting to, and potentially being allowed to continue to increase its production levels to its pre-problem levels. I'm trying to think what the word is. They were restricted because of the US, for instance, and the UK not taking levels of oil from Iran. But the net result is that agreement potentially at risk, or certainly being less significant. So we have a downside reason to this. We'll be looking at the Canadian dollar in the other direction. One other trade that we're in at the moment, we took this trade on gold. We took gold through this level on here. We got a close above here. We've got a stops now at break even. We've had money off the table. And we're targeting around the 1300 price level in the first instance through these levels here. This market was, if we get the sell-off in the dollar, we'll expect to see this move to follow through. If we don't get the sell-off and the dollar pushes through up towards the 100 level, we could quite easily get stopped out at break even here. But we're relaxed with this now. We've got some profits. We've got no risk on the table. If the dollar goes one way, or if the dollar pulls back, we're taking profits in gold. And if it continues to the long side and we don't make those profits in gold, we'll obviously be looking for markets where we can make that based on that dollar strength. Okay guys, if you like what you see, the way we trade here, free trading event for anybody who wants to come along. This event is really for traders who've got some knowledge of the markets. I'm not saying you have to be truly experienced, but please come along anyway. You might struggle to keep up with the actual trading if you're not trading regularly already, but the amount of information you'll get a chance to find out, and simply the experience and the chance to speak with and interact with our most experienced fund managers. That event is November the 15th in London, 2 till 5 p.m. If you're interested, pop on the website, send us your contact details. But these events are becoming really popular. You will also have the opportunity to speak to existing Phoenix Blue members who have used our combination of technical and COT analysis along with fundamental analysis to take their trading to the next level, which means fewer losses, more profitability. That's where we hope to be able to take you. Okay guys, that's it for today. Trade carefully, and we'll speak to you again in the morning. Thank you and goodbye.